Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of business. Today we're diving into the VS Trust's latest annual report, a financial document so exciting it's practically a bedtime story for accountants. Get ready for a roller coaster of volatility. VS Trust is basically a company organized into separate little compartments called funds. Think of it like a toolbox, each compartment holding different tools for different jobs. Right now there are two main tools they're using, the 1x short VIX futures ETF called SVIX and the 2x long VIX short VIX futures ETF called EVIX. These aren't your typical stocks, they're tied to something called the VIX, which measures market volatility, how much the market jumps around. Now, SVIX tries to do the opposite of what the VIX does each day, a bit like a financial seesaw. URX, on the other hand, tries to double the IX's daily performance, amplifying the ups and downs. It is crucial to mention that these funds only try to reach their objectives for a single day, so if you hold them for longer, the results can be very different from what you expect. Because of this daily juggling act, these funds might not be a great fit for people planning to hold them longer than a day, especially if the market is acting like a caffeinated squirrel. Let's look at how SVIX can be expected to perform differently from the inverse of the VIX over any period. Keep that in mind before investing. I'll decas over any period. Keep that in mind before investing. The guy in charge is Volatility Shares LLC, acting as the sponsor or organizer, and also a commodity pool operator. Think of the sponsor as the driver, making sure the funds invest in the right things. They are registered with the Commodity Futures Trading Commission, a government agency that keeps an eye on these types of investments. They're also trying to keep their trading from messing up the market too much by limiting how much they participate in VX futures contracts. The sponsor will seek to minimize the market impact of rebalances across all exchange-traded products based on VX futures contracts by limiting VIX ETP participation on any given day in VX futures contracts to no more than 10% of the contracts traded on CBO Futures Exchange Inc. This limit is especially important during those crucial 15 minutes when they're adjusting their investments to match their goals from 3:45 p.m. to 4 hour Tradium to 4A Futures Exchange Inc. This limit is especially important during those crucial 15 minutes when they're adjusting their investments to match their goals. From 3:45 p.m. to 4 Aero p.m. to 4 Aero p.m. to 4 Aero p.m. to 4 Aero p.m. to 4:45 p.m. to 4 Aero p.m. Eastern Time. A futures contract is like agreeing to buy something at a set price in the future. So if a fund wants to bet that volatility will go up, they might buy VIX futures contracts. If they think it'll go down, they might sell them. Here's something really important to understand. The VIX and VIX futures contracts are different things. The VIX tells you about the market's expected volatility right now, while VIX futures contracts tell you what people think volatility will be in the future. There's no direct relationship between the two, so these funds should be expected to perform very differently from the VIX, even though their goal is to track it, or 1x or 2x of it. The fund's shares are listed on the CBO BZX exchange. You can buy and sell them like regular stocks, but keep in mind that only certain big players called authorized participants can create new shares or redeem existing ones directly with the fund. Here is a quick snapshot. As of late February 2025, there were about 13.5 million shares of the 1x short VVIX futures ETF and around 5.8 million shares of the 2x long VIX futures ETF floating around. In today's world, you can't forget about cybersecurity. VS Trust recognizes the importance of managing cybersecurity risks to protect its business operations, clients, and stakeholders. They've put together a plan to spot and deal with cyber threats, including checking on any third-party companies they work with. So far, they haven't had any major cyber incidents, but they are monitoring their systems all the time. Let's check out the financials. The funds do not make distributions to shareholders, so don't expect payouts. Now, let's look at the numbers, starting with 1x short VIX futures ETF. The value of the fund increased significantly from about $125 million to over $300 million. The number of shares outstanding also jumped up, but even though the fund grew, the value of each share actually went down about 33%. This happened because the fund is designed to do the opposite of what the VIX does, and the VX decreased a lot during the year. Looking at the money coming in and out, we see that the fund's net income went down compared to the previous year. thanks to a decrease in the prices of the futures it invests in. Now, shifting gears to the Tubex Longvax Futures ETF, just like its brother in the short direction, it too had major growth, even greater from about 70 million to almost 90 million, to almost 190 million. Yet again, it did not come without a price. The per share of net asset value got absolutely hammered, losing 75%. This is because the fund seeks to double the performance of the VIX, and the VIX decreased a lot during the year. Looking at income, it's not pretty. The fund experienced a net loss for the year, although less bad as in the previous year. This happened mainly because the value of the futures it was betting on went down. Let's just say it outright. These numbers make it extra clear that timing and understanding how these funds work is super important. You aren't buying and holding these, that's for sure. Finally, the report also lists the fees paid to the accounting firms that audited the fund's financials. It's good to see that everything is being checked by independent eyes. Audit fees totaled to about $36,000 and tax fees added up to about $600,000. These include certain tax compliance and reporting services. The sponsor's policies are implemented to ensure risks are addressed with appropriate processes and measures. As of the date of this report, there are no known events that would suggest a lack of integrity or trust. Furthermore, the cybersecurity controls are very important and followed. It is important to note the people in charge of VS Trust have plenty of investment management experience, particularly in ETFs. Some of them have previously worked at Invest Invol LLC, RecShares LLC, and Global X Management Company LLC in similar roles. It's important to understand that the sponsor does not have general fiduciary duties. The trust agreement provides that the sponsor and its affiliates shall have no liability to the trust or to any shareholder for any loss suffered by the trust arising out of any action or inaction of the sponsor. Related parties make sure that all parties involved act in a good faith. Now, putting on my investment analyst hat, VS Trust is operating in a very niche segment focused on volatility products. The fund strategy, while potentially lucrative, carries significant risk, particularly for retail investors. The daily rebalancing, combined with the use of leverage, makes these funds behave in ways that can be very different than what investors anticipate and may not be suitable for a buy and hold strategy. The most glaring risk I see is the potential for significant losses due to compounding and volatility, as previously mentioned. A big swing in the market can wipe out a substantial portion of your investment in a single day. So timing is absolutely crucial overall. VS Trust is not for the faint of heart. It's a high risk, high reward play that requires a deep understanding of market dynamics and active management. Thanks for watching. If you found this decodering helpful, please hit that like button, drop a comment with your thoughts, and subscribe for more deep dives into the world of corporate finance.